with the mouse?
I don't know. Can we do it? All right. I don't know what the hell you're doing over here. Okay, so we're live. Oh shit, I almost hit the wrong button.
Are we live? 'Cause that
Yeah,
seems
we're
like
live.
a 30-second delay.
Well, I think that's what the delay is. All right. What are you?
What's up? Here we are. So, I can't talk like that. I can't look at that one. So I have to look at the one where we're recording. I have to see that. I can't do that one where it's like a 30-second delay.
Well, don't look at it. I don't know what you're talking about. We're here.
We're here.
What are we doing?
First of many live streams where we will walk through the process of constructing a top 10 stocks going ex-dividend next week. I'll show you where I locate them, how I evaluate them, and then at the end, if there's any questions, we'll actually...
So my question, first thing to answer would be, why do we do this?
Because it gives you an idea. Like if you can get into something that's undervalued that goes ex-dividend next week, you're actually supercharging your ability to start churning over more shares and more cash.
So that was the initial thought process, but then we also noticed that he was finding stocks that we didn't know about. So this is a great way to just find stuff to get into.
Generally, the more you research, the more you find. That's normally how that works.
Yep.
So the first thing we do is we pull up investing.com. And they actually have on investing.com, they actually have a dividend calendar. Click on the calendar. This thing right there.
I'm like, nope.
And we're going to do it for next week, so it'll be the 27th.
27th?
Through the 3rd.
27th through the 3rd?
Yeah.
What the hell just happened? Okay. Apply.
So what we did is we just filtered it to the next week. I go the Saturday to Saturday. Other people, you can obviously do Friday through Friday, whatever. But see, we would have missed that one on Saturday had we done Friday to Friday. To look at that. The fuck? They actually pay a dividend on
Saturday?
Yeah, on Saturday. So now this gives you a list of everything that, like, not obviously it's not an exhaustive list. It's like everything that this particular website picks up, but it's pretty good. It's a pretty good starting point. What are you doing?
I was trying to. No, we'll just have to check comments then. I still haven't figured that out.
So now we get to scroll through and see if anything looks juicy here. I normally look at this the dividend column and the type column. Like you see that the DIT has 28 cents, but it has an O there. DIT. O means it's other. That doesn't mean it's a normal dividend. The one above it has 3M. That means it's their quarterly dividend. And the one that says 1M is their monthly dividend.
Okay, so O means random.
Right. So
dividend?
I like to look for RQI seems like something we should research. Let's research RQI. So go into my template and type in RQI. But you have to put the caps on.
RQI.
Okay. Then go back to the investing.com thing. Now let's scroll down here and see if there's any other ones that look good.
I don't even see RQI. Oh, never mind.
I like to find ones that are generally more than 5%, but that's me. We can look up IVR because that one's at 16.7%.
IVR?
Yeah.
So IVR.
So basically what you're doing is you're going through a list of hundreds of stocks and you're actually condensing it down to, like, hopefully less than 100.
Do you want to sort by yield?
No.
Okay.
Just go like this. This is, I mean, you can, but this is just easier for me. Scroll down. Okay. Let's look up PSBD.
PSBD?
PSBD. You really need to have this sheet on the same sheet as the Schwab thing, but we'll do that next time.
That's what you want?
Yeah. Why that get all crazy there? What's going on there?
But our faces are down here, so this doesn't really help anybody do anything.
Okay, PSBD. Okay. Now you see PSEC is like it has a high yield, but I know that one's trash, so we don't have to bother looking that one up.
Okay.
You scroll too far. So that TWN. Oh, let's see how it says 12 month. That's their yearly. That's their yearly dividend.
Yearly dividend. We
So-
don't like those.
I don't really care for those now. Scroll on down. Okay, so that looks like that's it for Monday, the 29th. Now we're on to Tuesday, the 30th. BTI. Let's put that one in the list. BTI.
I recognize that ticker.
BTI, not V. It's British Tobacco. And then you'll find the more that you do this, the more that you actually know, like some of them are worthwhile, other ones aren't. Like that Central Europe CEE, it has a 2.26. I know that's garbage.
Marcus, go away.
Go away.
Closet, they're filming.
You put Ben on there. Ben's a good one.
B-I-N. Ben.
Ben.
Oh.
Benjamin Franklin Resources. It's like we're
Benjamin
basically, this is
Franklin.
the boring part, composing the list, and then once we compose the list, we'll actually,
Do some fun stuff.
yeah. But you see how this one here is 8.23% yield there, that
GPMT.
but you see how it's only 0.05 dividend. I can tell you that one only, that's like $2 a share. That one's crap. And you'll start to pick up little shortcuts like that, so it just doesn't take so long, because this is it could be exhausting if you Nog is a good one to put in Nog.
N-O-G?
Nog.
Oh, way down there. Okay. N-O-G.
Now here we have these are some closed-ended funds here. These IAE.
IHD.
You can put it in MTN. That one looks pretty good. 6.23% for two. So that one's going to be an expensive one.
MTN.
But the IHE is a closed-ended fund. IHD is a closed-ended fund. And no, we'll just put IHD on there so we can show them how to do a closed-ended fund in case we don't find one.
Okay.
All right, scroll on down. Oh, never mind. AEF.
You want me to get rid of this one?
Yeah.
AEF?
AEF, FAX.
You want that one on too?
Yeah.
FAX.
THQ.
You're like a whole bunch.
Yeah.
THQ.
Okay, scroll on down. AGNC.
I recognize that ticker.
Yeah, scroll down. I mean, you see how the AGNC has like all these preferred shares here. 9%. 9%. 7 point. Like, what are you doing? Show them. Highlight it. 9%. 7.79. 8 points. Those are all preferred shares of AGNC, but I'd rather have AGNC.
Yeah, 13.28.
The only time you do that is like if the underlying stock costs too much, like we just picked up DLR, the preferred L, that's $20, whereas DLR itself is like $170. Or you have a belief like that the dividend might be cut because preferred shares get paid the dividend before regular shareholders get paid.
Hold on, I want to try to pop this out. Can we pop this out? Pop out chat. There we go. I'm gonna put this down here, I think,
Okay.
because I think our faces are right there.
Okay. Whatever you need to do.
Oh, look, there's our faces.
There's our faces.
Okay, we're just gonna shove you guys down here.
Down here by our faces.
All right, since I can't figure stuff out. Back to the chart, which was that one. Yeah. Okay, so downsize. Look at this. I'm figuring stuff out. Kind of.
Okay. What's agency? AQN, but that doesn't pay enough. That's a NLY. We were just talking about Annaly Capital Management.
NLY?
NLY.
Don't know what just happened. NLY? Oh, look, font changed.
To ARI.
ARI.
Okay, scroll down.
Very weird.
Scroll down some more. That's a whole slew of preferred shares at the bottom. The Ashford Hospitality, those are all preferred shares. PG, PH, PD, PF. What's do BGS so that I know that one's shit, so I know I can show them.
PGS? You know that one's shit.
I know that one's garbage, so
Banff.
Scroll down.
Do.
CGBD.
CGB. I really need to get my keys fixed. I can't read them.
Learn to read.
CGBD.
Do CIM.
Sim.
Mm-hmm. Do CCAP.
CCAP. CACAP. Deere and Company. Like John Deere?
John Deere, right? Yeah, that is like. Scroll down. EFC.
What are you seeing?
Oh wait, is that the F?
No. Get out of here.
EFC, like you see, highlight it. 13 cents a month at 11.34.
Okay.
So EA earn is 8 cents a month. That's 18.32. That means that one's really
cheap.
Yeah, EPR is another good one.
Like EPD?
EPR.
EPR. I was thinking. Get off my dick. Really cheap, like penny stock land.
Yeah, but it's gonna be. Scroll. 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 GSBD.
GSBD.
Mm-hmm. Scroll. IIPR.
Ooh. That's a good one.
I mean, could be. You see, like that one right there, the LFT. Like people probably look at that yield and say, "Oh, that's really good," but 4 cents for 3 months, it means that one's like $1.70 a share.
Penny stock.
There's that one MDLZ that we were like researching when we did that hypothetical.
You should talk louder.
So that was the one we did a hypothetical of 10,000 invested into dividend growth stocks. MDLZ came up, but it doesn't pay shit, so it's all good. MSIF. That one's one I want to talk about.
Put it on?
Yeah.
MSIF.
I will talk about that one in a hot minute, though, when we get to it. OBDC.
OBDC.
Scrolly.
Bunch of prefers. PEB. PEB.
That one's up there a lot, that Presidio Property Trust, SQFTP. That one's always there. I think it's a monthly. Is it a pay monthly?
Presidio?
Yeah, it pays monthly. That one's always on this list. The one right below, square footage. SQFTP. That one's always popping up.
Presidio. That's that little town
put
we're at.
O on there. Everyone's favorite's O. There that fucker is.
Oh.
We'll actually dive into why I don't actually invest in O.
It's gonna make the cut. It does sometimes, doesn't it?
It may or may not. Yeah, we'll see. Like I never know what's gonna make the cut. I just pick stuff out. Scroll. STWD.
STWD. It's another one I recognize.
SCM.
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 I recognize that one too. Trin.
Yeah, that one's one we own. TRIN. Scrolly.
What about that one?
No.
Vicip. Why not?
I researched that one recently. I mean, you can put it on there. We can research, but no.
I don't have to. So you're just not gonna nix. You're gonna nix that one.
Yeah.
Okay.
Like I said, once you do this enough, you start to
see.
Okay, stop. You're going too fast.
Oh, sorry. What yield are you looking for in the right column here?
BMY. I'm looking for between. I like it to be between 6 and whatever, but you learn like some of the cheaper ones. You'll actually pick up that those are.
Yeah, bad.
One's to DX. That one's a monthly that pays you 17 cents. That's not terrible. Scrolly. Because like if you look at KDP for example, that one's like a well-known Dr. Pepper stock. It's yielding 3.2, but it's only 23 cents. So that's why I kind of like, if I'm gonna be taking on a risk, I want to be able to get more than.
I didn't know those merged.
3%.
That one, FCBC, or do you know that one's crapola?
No, put that one on there. FCBC.
Did I actually find one on my own?
Looks that way.
Seriously. Old Republic.
That has an O, so that's not the normal dividend. So that's one of those ones you have to do more research on.
To find out that it's not the normal?
It's an O, so that's a special dividend.
I see. So we don't want to put that on?
No.
Okay.
I have another list for those. Maybe that wash, scroll up.
Wash?
Yeah, do wash, yeah. Okay, so there, after doing all that, we actually have a list now.
That's not too bad.
We went through all those.
Okay, do we need anything else on this?
No, you can close that out.
Okay, so I'm going to sit here. We're going to nixie you.
Now we go into Charles Schwab, because Charles Schwab I find the easiest to research.
Okay.
Pull up that list again.
Pshaw.
No, this is the part that's
Annoying.
yeah. So can we get it to like where I can see what we're actually trying to research?
Yeah. Oh my god.
Like, what is going on?
Nope, I can't do it. I can't do it unless you want me to stick it in front of the damn search bar.
Well, just whatever you need to do. I need it full size.
This full size?
Yeah.
Okay, so we're gonna have to toggle.
RQI. So put RQI into the Schwab bar.
Okay. RQI.
This is the first one we found, and we pull it up. We'll see that it's 1148, which isn't necessarily a disqualifying thing. It's 52-week range. It's like right in the middle, so that has potential to be undervalued. That Morningstar thing right there, that's like they do like a rating of closed-ended funds. You look at its chart for the click on the year to date. I don't care about the 3-year chart.
YTD. Where the hell's YTD?
Current year. So there we go. So that one actually has been trading in a band until recently, where it fell off a little bit. Okay.
This volume spiked.
Scroll down to, because it's closing the fund, we have to go the whole way to the bottom. Right here, you'll see that it has 1.63 billion assets under management. Its expenses, who cares? No one cares. 201 holdings. So that's quite a bit. Okay, and you scroll down, then you'll see like its top 10 holdings are, looks like storage centers and data centers type stuff. Okay. You see its distribution is 9 cents a month, and it's 9.47. So that's, why is that all like my glasses fogged? Why is that all weird looking?
I don't know.
Okay, scroll all down further. There's what we need to do, because it's a closing the fund. We're looking at it right now. It's trading at 5.35% discount, which is about par value for the year. Click on the since inception, and it trades at -6. Is that what that says?
Negative 6.3.
So it's about. All right, scroll up.
What am I looking for?
Look at it there. 1 year, it's down 5%, 3%. All right, yeah. Go back to the chart or the list, and you want to delete line number 6.
Okay, you need to explain why.
Because its historical discount was 6.36% discount, and it was at 5.35. So that means it's a little overvalued, but it's a little overvalued / fair valued. But then if you scroll up to the returns, you see the 1 year is -5.
What am I looking at here?
Yeah, and the NAV is -3. And you scroll up to the chart, and you'll see that it was trading sideways, but then it went down. I mean, one thing, let's go look at the dividend, see if they cut their dividend. That explains why it. You can't fucking see because that goddamn shit is like in Chinese stuff.
I don't know what the hell that is. It doesn't even have a pop-up box like it usually does. Don't like it?
No, I don't like that one. There's better ones. Just because it's trading, like it's overvalued and it's overvalued right now, even though it's trading down like that. It's a warning sign. You see what I'm saying? Like it should be like
above.
Yeah, it
If it was
should
gonna
be a discount as opposed to that one. IVR is the next one.
IVR. Okay, IVR.
Put that one into Schwabi.
IV.
You can just put it right here.
Why can't I put it where I want to put it?
Because that takes longer. Because this one literally pulls it up right there. You just click on it.
Well, so did that one.
Yeah, it's garbage. So this is an M rate. I know if you've followed along anytime, you know I'm high on M rates. So that's good. Okay, this one's different than the closing. If I remember last time we saw that it had like the Morningstar thing. This one has all these things, like these different publications that grade stuff. So first things we can look at is their chart is okay. Looks like it turned around.
Yeah, boop boop.
And the second thing we can look at right there is that LSEG, which says that it's price target of 8. It doesn't, like, I'm pretty sure there's supposed to be more.
Maintains a current price target of 8.
Okay. Scroll down here to the dividend. 16.22, 36. So they did just raise their dividend by 2 cents, so that's good. Scroll down to earnings. Earnings, you went past earnings. There's earnings.
Oh. I don't know why I was looking at the other side.
So you see that it has 58 cents, which covers their, that doesn't cover their, was it a monthly dividend or is it a quarterly dividend? A quarterly, okay, yeah, so it does cover their dividend. That's what we're doing there is just non-GAAP is, you want that to actually go back up to the dividend payment. You want that to actually cover the dividend payment, but if sometimes you have to be mindful because if it's a monthly payment, you have to take that times 3. So that actually,
this is a quarterly payer.
Yeah, that's what I'm saying, but sometimes they're monthly. So that 56 covers that, so that's good. Okay, scroll down to their price to earnings, which is right there. See their current price to earnings 1742. Their forward is 356. If you're not familiar with the price to earnings is, the PE ratio is how much you have to spend to make $1. So that you'd have to make $1 in this stock, you'd have to spend 356, which is pretty good. Okay, scroll down to peer. And so now I want to look at net profit margin, that very bottom line. You want to make sure that that's positive.
Plus 18%.
Yeah, so that's good. And go down one more thing. Go down to the balance sheet. You just passed the balance sheet. There it is. Balance sheet. See right there.
Okay, I see.
So this one's the debt has increased the last 2 years, but it's down where it was 5 years. Okay, click on the income statement. Okay, put that. So go back up to the dividend part. Dividend. So it's, you want to put 12.29. Go back into the 12.29 36 cents.
Here?
Yep, 12.29. You don't have to do that. Just put 12.29, and then it's 0.36. Let me go back to Schwab. The yield is 16.22%. And then we saw the profit margin was 38, something like that.
The percent one?
Yeah.
18.16.
18.16. Okay, put that in there. And then you want to go back to, that was 3.62. Was that what that was?
For what?
Oh, you want to go back up to the earnings. 3.56. So put 3.56 versus
3.56 versus.
Oh, you get rid of that capitalization crap. Then you have to go back into Schwab. This is one of the nifty treats and tricks in Schwab, all the way to the top. You can click on this thing right there where it says more. Oh, this is one of the weird ones. But anyway, click on it. So let's see.
Margin requirements?
Oh, mortgage.
Oh, real estate. Okay, so you go into the sector.
It'll break it down to the sector, but this is the only one where I don't think it does it. But so click on valuation. Oh, it does. What does that say? 19.23.
It didn't do anything. 19.23.
And 19, that's the whole subsector. So 19.23. So you go back to that chart where you had the 3 point whatever. 1923. So that's pretty good. Then you want to go up to where it says current. Like, what are you doing? Go back to Schwabi. Current is 862. And then buy up to. Generally, this is where I would use the back to Schwab, but because it cut it off, that LSEG will give you an idea, but because it cut it off, I'm going to have to go into Yahoo Finance.
What do you mean it cut it off?
That's not. I'm pretty sure it's missing something. So I think it's supposed to be like 830 or 850 or whatever.
You have to go where?
So go into Yahoo Finance, and this is IVR. So
Yahoo.
and I'll show you like a real quick. That's not quick because Yahoo's slow as shit, but like it's a real. So this is another nifty spot where you can find stuff in the top bar. Type IVR.
IVR.
And then go down to analysis. Okay, and you can scroll down in here, and this will show you all the pertinent information, like their estimates, whether they're increasing or not. Go all the way to the bottom, where it says growth estimates. This is projected to shrink by 9%, so that's troublesome. Okay, scroll to the top again. Click on Analyst Insights. That's that middle one. And they're saying the target price is $8. So you go into our chart.
So it was 8.
We can get rid of that. Delete that line. The reason we're doing that is because if the buy up to is $8 and it's currently $8.62, we can't buy that next week to get the dividend.
Okay, so that one's out too.
So PSBD.
PSBD.
And you'll see, like, the more you do this, the quicker we get. You want to go into Schwab.
Hold on. PSBD.
PSBD.
Okay.
Okay, 1213, nice. Scroll down. Let's look at the chart. Scroll down. Chart looks like absolute cheeks. This did just
LSEG says hold.
This did recently just hit its 52-week low. Okay, scroll down.
52-week low.
52-week low, yeah.
Look at that. Quarterly dividend. Boom, 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 boom.
Okay, this one pays extra or special dividend. That's why you see Q4 there. It says 36 and it has that extra amount there.
Oh, okay. So those are 2 Q3s. Interesting.
Okay, scroll
13.12.
So it's 0.1, so it made 10 cents per share. But it's paying out 46. That's very troublesome. That means they're actually using cash or they're borrowing to pay out their dividend. Okay, scroll down. Yeah, that one could be just nixed because of that.
What did you look at here?
Non-GAAP
Non-GAAP.
is how much earnings per share they're getting. If they're making 10 cents per share, but they're paying out 36 cents per share. That means they're in a deficit of 26 cents per share.
Okay. So if you're looking at debt, their debt's going up.
That's probably how they're paying for their dividend.
That's a red flag because that means that they will probably cut dividend.
I mean, we didn't even go. I'll go back into Schwab once. So we'll just to verify that, just for shits and giggles, go up to the dividend and then click on the show more down there at the bottom. So they've been paying a special dividend, but their payout ratio is 393.40 cents.
What?
Over there on the right, payout ratio.
That's really bad.
That's correct. Yeah. Okay. So
Massive red cut.
yeah, they're gonna have to cut their dividend.
Delete. BTI.
BTI. Now this one I'm sure